Indonesia's economy is the largest in Southeast Asia. It is the fourth most populous country in the world, with 64% of population in the productive age category. The rising middle class is also surfacing as a potential engine for growth. The country joined the $1 trillion club in 2017 and has been posting stable growth rates of between 5 to 6% annually for the past decade. Furthermore, continuous improvements in ease of doing business and standing in the Corruption Perception Index also reflects the country's rise in global perception. This is further supported by investment-grade sovereign rating given by prominent rating agencies. Economic reform is underway, with gradual shifts from commodity-based activities toward manufacturing and service sectors, and also from consumption-led towards investment-led growth, with a strong manufacturing sector and investment initiatives. The Indonesian stock exchange is also one of the largest in ASEAN in terms of market cap of around 518 billion. Moreover, the JCL also has been performing well throughout the years, posting around 17% CAGR return in the past 10 years. Historically, the JCI tends to rally in election years, recording excellent returns. In 2004, it achieved 45% return, 2009 was 87%, and 2014 was 22%. Positive return has also been the trend both before and after the election. Though 6-month growth after election day is slower than the period prior to election day for the past 2 elections. This is also supported by the fact that Indonesian general elections have been held peacefully and transparently, while disputes are settled in a civil manner in the Constitutional Court. The trend also is sustained by good earnings growth and foreign flows into Indonesian equities during election year. Generally, the preliminary result based on quick counts by independent pollsters is in line with market expectations. They show that the Jokowi-Amin pair leads and won by 54 to 56% of the votes. Although the official real count will be out on the 22nd of May, most political analysts and statisticians believe that the quick counts are statistically significant and that the wide margin difference will be difficult to reverse. With the incumbent being re-elected, we expect policy continuity and returning confidence of investors, as the winner will continue to carry out fiscal reform, deregulation, and infrastructure development. Other areas of focus are human development by education through college tuition assistance and support on new economic sectors like the digital economy. Thus, we expect the JCI to continue its rally and follow its historical election year trend based on what we have discussed, as well as the continuation of net foreign purchase. We estimate the Jakarta Composite Index to retest the 6,690 high and is on track towards our base case estimate of 7,396, which represents about 17.2 times price to earning ratio at the end of the year. We foresee that continuity in infrastructure spending should bring a fresh boost into infrastructure-related sectors such as cement, construction, and precast concrete. Stocks in these sectors include SMGR, WICA, PTPP, WSBP, and WTON. Furthermore, the multiplier effects from the ongoing infrastructure upgrades will open new opportunities for industrial estate and property sectors. For these sectors, we think that we should look at stocks such as BSDE, PWON, and SSIA. Beside infrastructure, the newly elected government also puts significant attention on improving the standard of living through numerous programs such as the universal healthcare and education programs such as Kartu Indonesia, Rural Area Development Fund, also known as Dana Desa, and disbursement for the needy, including college tuition. Along the way, purchasing power for lower income groups is expected to rise with the upcoming Ramadan festivities. While consumer staples, stocks such as ICBP and UNVR, and retail sectors, for example, RLS, Ace Hardware, and MAPI are expected to have better days ahead. Bank Indonesia may cut interest rate from the current level of 6% per annum as the threat from currency volatility diminishes. Moreover, Indonesia has been experiencing a low and steady inflation rate in the past 2 years. If the lower interest rate trend scenario materializes, banking and property sectors are the front runners to harness the tailwinds. Our banking sector stock picks are BBCA, BBRI, and BMRI.